Well, welcome to video 2 in the Focus to Profit series, where we talk about how to really solve the biggest challenges that new traders have. In this video, we'll cover examples. So I'll go through some examples on how I developed processes around my trade ideas. And if you haven't watched the previous video, you'll definitely want to check that out, because we really walk through what is the biggest challenge that most new traders have, which is focus. And then the answer to that is focusing on a single trade idea until that becomes profitable. And we'll walk through a series of examples from my own trading, so that hopefully this will provide you some ideas on how to develop your own processes to make you more efficient and to help you create your edge in the markets that you trade. So let's first jump in here. I'll go over something here that I did on the last video at the tail end, which is just an overview of somewhat how I trade. This is probably about 70% maybe of the things that I trade. And I'm consistently adding or removing to this as the numbers in my P&L backs up that I actually have an edge in the markets that I trade. If you're a new trader, I've already said this, you should have just one trade idea, and that trade idea most likely should be in one market. You shouldn't have something like this where you have multiple markets. But if you want to understand me as a trader and how I've got here, basically I have a TA system methodology. So I've developed a TA system that provides me an edge across markets. And I trade that TA system or TA methodology in multiple markets in multiple instruments. Now, each individual market has its own tweak. So in the equity market, there's a specific way that I tweak my TA methodology to match the market participants, how that market moves, and the market factors that affect that market. So when I mentioned in the last video that you have to have a market understanding, you just can't develop a TA system and then apply it to these other markets without tweaking. That should be common sense. And I think I said this already. If I haven't, if you're a new trader, your trade ideas should not look like this. You should work on one trade idea until it becomes profitable. So let's jump in here. I'll do a quick overview just so that it'll provide some context, and then we'll jump into charts and we'll start talking about using kind of this framework to develop your own process. So in the equity market, think stocks. I trade swing trades primarily. 22 to 60%. My average loss is 8% there. 60 plus percent because the way I enter. Maybe I'll talk about that here in this video. I use a scanner there. I wish this type of scanner existed in the crypto market, because this type of scanner finds some really good trades. But a lot of times what I'm doing in the equity market is I'm working my trade backwards. So I develop a technical analysis edge, that a pattern, and it involves price action in addition to indicators. And then I develop a scanner backwards to find those, so I don't have to go through chart after chart. The other thing I do in the equity market is value investing. Think Boeing and those type of companies, Disney, companies that I believe have potential upside in long into the future. I also invest in stuff that pay dividends. So I focus on specific opportunities that pay out dividends. In the Forex market, I do scalping, swings, and I have 2 algo trades on the daily time frame. I think we'll go through one of those. Scalping is really a lot of my bread and butter, so I make some of my best profits scalping and my swing trades in the Forex market. Crypto, I'm primarily focused on, I do some scalping there when the opportunity presents, and that's usually when I see something pop up on a scanner, and then it's very obvious to me that it's at an inflection point to move, and then I'll do a scalp anywhere from 2 to 15%, given whatever time frame I'm looking at and how closely I'm watching it. And then my primary crypto stuff at this point in time is my swings, 20 to 80%, and then long term. I have a long-term bullish view of some things in this market, and I also want a pulse of what's in this market, so that the next cycle or the cycles that come, I want to be there when the next maybe potential Amazon or something in that space. I think BNB is kind of there right now. So if you're in my Discord group, you know I talk about trading BNB a lot, the Binance token. And as we sit right now, if I look up, it's right at $29. So it's $29.12. So it's definitely approaching that $30 impulse that I mentioned before. I think last week it impulsed to 28, and I said, look, that's a flag for 30. maybe one of these days I'll talk about how you can look at markets and see where the market is actually intending to go based on the flag patterns that it gives. So that's probably a video for another time. I'll also do long term. And then oil. I included oil here because this is, I trade commodities and oil around pivots. I look for specific pivot points in the market, regardless of what's going on geopolitically. And for some reason, these pivots actually happen no matter what happens geopolitically in the world. So I shared in a recent video one of my oil trades. That's a good overview of how I actually trade the oil markets. I look for specific points that are high probability trades, and then I trade those markets in a couple different ways. I express that trade in a couple different ways. But in this video, I probably won't do an example from oil. It'll primarily be equity, Forex, and crypto. And before we jump over to charts, I should mention, I didn't just get here. This was a lot of hard work. It's still a lot of focus and hard work. But I got here by following a systematic step-by-step process and always focusing on continuous improvement in my trading, while backed up by the most important thing, which is, do the numbers make sense? So it makes no sense for me to do all this if I look at this and the math just does not make sense. The P&L doesn't make sense. I'm not using my time effectively. So it's taken me quite a while and effort and focus to get to this point. I just wanted to share that for context. I wanted to share this too, just as I move forward with a lot of the videos and a lot of the directions that I'd like to take videos and my training. I kind of wanted to share more of a full view of how I spend my trading time, how I spend my trading day, and what I do. So that's kind of the reason for me sharing some of this too as well. So let's jump over to the charts and let's start diving into the process examples. So for context, for some of these in the equity market, we're going to start with stocks. I'll share just some of my trades, some of my recent trades. So GoPro is one that I'm still in. And how I typically enter these trades is that, and you'll see the scanners that I use and the process that I go through. But I start with a scanner, and then I go through my technical analysis process and my trade idea process that is a binary decision. And there's rules that I've developed that I have written down that I walk through. And I enter 3 positions on all of these. I enter one with a target 1, target 2, and target 3. So target 1 is typically, you'll see that there's this indicator called ATR pips. I haven't renamed it yet, but it's basically an ATR indicator. And then my target 1 is typically 1.5 to 2 ATR. And also my target 2 is around 3 to 4 ATR. And then target 3 is just left to run, and I usually leave it in profit. I never put my stop loss at break even. So on this trade, for instance, the last position that I have right now, I've actually entered another position as well based on another signal, but the last position is in the position for run, and I'm currently up right around 58% from this last position. If we go to another one that is similar, AKRX, this is another one I bought before it gapped up here pretty big. And you'll see on this one here, I entered around 29 April, and then it almost hit my stop loss. I think I mentioned in the beginning that a lot of my trading in the equity side, I set my stop loss and I set my profit targets, and I do trade management, but my trade management isn't as heavy as what I do in the Forex market, where in something in the Forex market, if it doesn't look right, I'm cutting and running. In the equity market, based on how I've developed my trade ideas, I give it room to do this. I give it room to actually kind of get close to my stop loss before I cut the position. Sometimes I will if I see something absolutely that sticks out, but most of the time I'm letting the trade play out like it did here. So I'm still in this position. It hit my target 1. It actually hit my target 1 here, target 2 here, and then it's target 3, the letting it run is still kind of going. Now what I will do is I will update this position from time to time. So I might say, well, it's already found support at half of this range here, and this is part of my rules. So part of my trade management rules is when I see an impulse move like this, the first thing that I do on an impulse move is I take 50% of that, and I say, well, this impulse move, this isn't the right way to look at it, by the way, and I'm already hijacking this video. So, but I'd like to explain things when I mention it. This is an impulse move right here. This is one impulse move, 80%. The other way to look at this is that this is another impulse move. So on most impulse moves, you're going to find a 50% retracement range. So on this one here, it's pretty obvious that this is the impulse that the market is using. So, and that's where it's kind of found support, right at that 50% range. So if this is ever broken, this 50% range, I will most likely exit this third position. So because it has in this level around underneath the $8 mark, so this is underneath an $8 mark, these low cap equities, it has a tendency to then correct down past here. So I'm just sharing that just to kind of give you more of my process. Once in mind, all these decisions that I'm making are rule based. They're decisions where I don't have to think about it. I see an impulse like this, okay? And just imagine if we go back in time, and I'm already off my script, so I apologize. Imagine we go back in time, and this is where we're looking at the chart, okay? We're on the daily time frame here. And you see this impulse move here. Well, you should maybe have a rule, if it makes sense for your trade idea, on what happens when something like this happens. Do you take profit? Or my rule is, well, I see an impulse move. There's two impulse moves here, really. There's this impulse move. And actually, you probably put it from here. This impulse move here. And then you have this separate impulse move. Well, my trade idea, my rule says when I see an impulse, I take 50% of that impulse and I look for support. And if support doesn't kick in at 50% of that impulse, I take profits. And I take profits usually at a higher percentage because it's already broken one of my technical analysis edges. So that's a simple idea as we're just kind of going through this initially before we've even jumped in on how to look at this and how you need to, I believe you need to start thinking about this. You need to start developing within your trade system so that you don't have to think about it. You see something like this on a chart, you already have defined the rule based on how you've analyzed the market. Another thing I'll share, I don't know if one thing you can do if you want to become a really good trader is go back to all the great crashes in history, the Great Depression and everything else. You can find these charts. You can trade these charts. Go back and look at these charts. Scroll through them day by day. Look at the volume. Look at how things break down. That's another thing that would make you a tremendously great trader. Not everybody's going to do it, but I'm saying if you spend the time and do it, it helped me really trade in high volatility times like we're seeing right now. So it's something that if you really want to develop an edge further, that's something I would suggest doing. So now that I've hijacked this video like I typically do, let's get back on track. And let's just go through a couple more trades. Here's another really good trade I've shared before that I'm in, ARQL. This one here, I'm still in this one as well. So this one's way back here. And I'll show you the scanners that these are developed from so that you can see the process. One of my losing trades, I think Icon was a losing trade. ICON. Yeah, this is a losing trade. So here, this is one of my losers. So you can see I have technical analysis on here, and right here where it broke down, it's covered up. It broke remember I said my impulse rule, so it broke the impulse rule here. And you'll see as soon as it broke that impulse rule, it broke down. So this was a loss for me here. This is one of my losing trades off the scanner. So I wanted to share just some trades just so that you kind of get the end result of what we're doing here. So let's reset and let's talk about process. So my process for these trades that I've just unfolded is this. I start with one of my scanners, which is Stock Fetcher. And this, I wish something like this existed in the crypto market, because you can see I'm running a scanner right now, and we'll go into more detail on these things, but I'll give you an overview first. So this is great because you get all the charts, you develop a scanner how you want to develop it, you get all the charts, and then you can go to TradingView to do technical analysis. So that's what I do. So I run a scanner, and then I go to TradingView, and I've set up this chart. If you look at this chart here, it's titled Low Cap Equity, and I do all my technical analysis on this chart, but it also has 3 individual charts, okay? So you'll see that it's going to be hard to see in the video here. I have a 34-inch monitors as my monitors, so this is really wide for me. But these are 3 separate displays set up for the different process that I go through. And I'll share that process. So the first thing I do is I don't have all three of these displayed at once. So I open it up like this. And this is the great thing about TradingView. If you learn the shortcuts and everything else, you can really fly through this stuff quick. So at a high level overview, I start with the scanner. Something on the scanner fits a pattern that I'm looking for. So I don't go through every one of these. I look at these at a glance and I find something that has a pattern. And then my process is to go over to tab 1. And if you remember in the example I gave is I write down my initial analysis. I have actually a separate book, like a book that accountants have, that I actually write down. And what do? The first thing I do is, does this chart, let's go to something that just is, I'm trying to see something recent. So here's a recent trade I'm currently in right now. So this is using one of the scanners that I'll show you here. So this trade popped up on one of the scanners and I entered back here, and I actually did enter again here today as it held up. We'll see if that trade continues to work out. But I'll look at this and I'll say, as soon as I view the chart, I'll say, what is the, if the next day retraces, what is it going to retrace to as far as price? And if the next day is bullish, where is it going to close? So I look at both upside and downside, and then I put a grade on which one I think is going to happen. So I look at the chart. I'm doing this after the close. So typically I do this after the close. I run my scanners after the close for the day, trading off the daily time frame. And this should actually have the day, sorry. And I trade off the daily time frame, and I look at this and I say, okay, will the next day be green or red? Where is that price going to close at? And then I go back every week and I look at that and I say whether or not I was right or wrong. Sometimes I might even project out a week and I say next week we'll close here. And I know I've heard a lot of people say you can't predict the market. I try to predict the market and I'm right a lot more than I'm wrong, but I'm not right to the point where I'd like to trade off of it. I use this as kind of a barometer of whether or not I'm reading price action correctly. What's my initial gut tell me? I still believe there's a strong gut aspect. As much as you try to get emotion out of trading, there's still a strong gut aspect to trading that I think most successful traders have. So the next thing that I do is that I look at this and I look at this in a specific order, like I said, in process. So I don't have to think about it. And you want to do this so that it becomes second nature. So when you pull up a chart, you're not wasting any time. You're looking at things in the same exact order that you've developed that gives you a binary decision. So my next thing is I look at indicator 1 here. And if indicator 1 is not in line with what that scanner said it should be, my binary decision is that this is not a trade I should look at. And then I look at indicator 2. And then what I do then is if those two pass the test, I'll then click tab and I'll go to kind of an intraday look. And you'll see here, it's kind of hard to see with the position on here, so I'll remove this. You'll see here what I look at is the last 5 to 7 days of trading time. And you can see that this is right within the session. Keep in mind, this is a process. So I do this. So basically, I'm looking at that first tab. It crossed all my binary decisions. Now I'm on this next tab, and I'm getting a feel for how has it been moving within the daily time frame on the 15-minute. And primarily, I'm looking at what is it doing around VWAP. How is it responding around VWAP? How has it been responding on retracement days? So there's rules that I'm looking for here. Once I get past that, and if this pattern is part of my binary decision, meaning that it looks like what I like to see and what I like to trade, then I go to the next tab, which is the 12-month view. I do this in every single trade, and I look at the 12-month view. Now this one here looks pretty dire. It looks like a lot of cryptocurrencies right now. So if we go to something like GoPro, I thought I had it I should have it in my watch list. I don't know why it's not there. Oh, it's not ordered by alphabetical. So GoPro here is really bottom, but there's at least some sign of life here down below. And there's not enough time, but when you're looking at larger time frames, you'll also notice on here I have the volume profile. So one simple, easy way to look at this is that based on the 12-month time frame, this probably most likely is going to be a 40%. So there's a 40% potential move based on the volume profile of a simple rudimentary analysis of it. The other thing that I'm looking on the 12-month time frame that's part of my rules is, do the value channels. You'll see that these are dynamic value channels here. Do the value channels hold up? Let's go to something that has a little bit more trading time. So here's ARQL, one of the trades that I previously showed. And what I'm looking here, part of my binary rules, is does it respect the dynamic channels? I used to draw these on there, but now with my dynamic price channel indicator, I look at this and does it respect the dynamic price channels that is drawn here? And if it does, then that passed one of my lists. I'm also looking at, when you have something that's been traded for a while, there's a tendency in the equity market, especially on the yearly time frame, for things to come back to the 5 EMA. So one thing, if you're trading equities, a good rule of thumb is kind of see where is it trading within regards to the 5 EMA. It oftentimes comes back to that. It retraces back to that if it's above it. And if it's below it, it often tests that. So that's something to keep in mind. It's a real general rule of thumb that I've used in the equity market. But once I get to this last chart and it's passed on my tests, then I go and do further technical analysis on the daily time frame. And this is where I have a process where I go through and I look at measured moves. I look at value channels. So for instance, we can see right here on this trade, if I remove this here, this is a value channel right here. It's a dynamic price channel, and this dynamic price channel has price action as well as a pattern that shows me that it has respected that channel. So that's a positive on that side. Same with here. This shows early signs that it's respecting this price channel as well. The other part of my process is that I then go on to looking at moving averages. So I don't leave all this to chance. I have a list, and you can look at this as a check mark, and you can say, okay, well, I've said that I should have moving averages on my chart. So I've got the 24, the 200, and the 50. And there's specific rules that I've assigned to all of these that correlate to the indicators as well. So a lot of times I'm looking for what is the space between the 24 and the 50 if the 24 is above the 50. In this case, we see the 200, the 50 is above the 200 and the 24 is above the 50. It's a really good sign, obviously, for strength. And we're seeing that this actual instrument right here, ARQL, is pretty consistently using the 24 EMA, that price, as a support as it's moving, as it's continued to have a bull run here. So if we see a close below the 24, this is part of my rules, especially when I see something very clear like this. If we see a close below the 24, that's probably a potential where I need to either move my last position into more profit or just take profits right there. So, like I said, these are binary decisions that I'm making. So now that I kind of gave an overview, let's go and just run a couple scanners. I'll just show you how this works. Let's see if we can find a trade here. So one of the scanners I like, one of the thing that I work backwards is this is a 3-bar pattern. This is, let's do this one. 3 days down, 1 day up. So basically it's 3 days down and then 1 day up. And then what I do, so I run these scanners and you can see over here what it's doing. I then go through here and I'm looking for my specific pattern that I like to trade. And I don't see anything on here that shows me from this scanner that there's a trade opportunity that I should even look further on. So then I go to one of the trades that I shared. Some of those are these type of trades. They're these type of scanners, which is like the $3 cross. And what this scanner does is on some of these low caps around $2, $3, $4, and $5, when it gets around that whole number, it tends to move or find support. And then there's a pattern of that where it bounces around that whole number. So you'll see that there's only two opportunities here. One of them is INAP. So we'll go and look at INAP. It's in computer and technology. So let's look at that. So I pull up INAP. And what's my first step? My process is I write down my initial thoughts. So my initial thoughts on here is it looks like it's probably going to close bull. And if it closed bull, I would say that it's probably going to close around 340 if it closed bull. If it closed bearish, then I would expect it to close around 263. So I'd write that down. And then I'm on to my next process. My next process is and the reason why I do that even if the trade doesn't fit my trade is because it helps me. I look at it as just can I predict the market? I know I've heard many traders say you shouldn't try to predict the market, but like I said, it's one of the things that I try to do. And I think it's one of the things that you can actually get good at, because if you can prove through numbers that you can predict where things are going to go in the ranges, then you're going to then kind of get to the next level. I can't explain it other than that. So that's why I do it. So I write that down. And then even if this trade doesn't fit a profile, it's part of my process to go back and look at it to see, because it at least met the first profile that it's something that I should dive in deeper. So, and that's also how I find new trade ideas, because sometimes I'll see something and then I won't take these trades because it won't pass my indicator tests. But as we go further, it actually, I find another edge in the market based on me just kind of predicting where things are, and I'm right. And then I kind of dive in and say, well, how can I then work that backwards is the way to look at it. Now, the first thing I'll say is the STSA is firing signal 1 here. So signal 1 here on my STSA has fired, and that leads me to immediately say that I should look for the next day here. I should put this on my watch list and look for a probe position. So I would put it on my watch list. So this is something that didn't pass any other test. Right now, I just saw right away, part of my process says I don't take the trade right away. But it's at least at the point where signal 1 has fired on the indicator that I've created, the STSI. And what I would then put, this is why I like TradingView too, because you can do a lot of this stuff. You can add a text note, so you can right click here, and then I would do trade ideas, or trade notes, sorry. And then I would put the date, which is 5/20/19, STSI signal 1. Basically, I'm putting on there, I'm sorry, why I even added it to my watch list. And what's great about TradingView too is that if you do Alt W, it'll take you right to that if it's already on your watch list. So for instance, if I was here on AKRX, what I can do is I can do Alt W, and then it'll highlight this, and then I can go to that specific trade note. You can see I have trade notes right here. I have basically $3 cross. That's how I found it. The date that I found it, pull back below $3 entry, and then I have my targets, my runs. See, what I do is I do target 1, target 2, and then where I think the eventual run will end up. So really, I'm saying that this eventual run will end up at 689. And that's where I should really consider taking my third profit if it gets to that point. I share that because this is part of my process. So part of my process is if I add something to a watch list, I don't just put it on the watch list. I want to add an additional note so that I remember. The other thing that I would do here, and I didn't because I'm doing this video and I'm not fully focused on this, is that I would say, how did I find this? So how did we find this? Well, we found it at a $3 cross. So what I would do is I would say, I would do 3 cross and then STSI signal 1. So I have my own shorthand that I use. So basically that way, let's say that I enter this trade or I do further technical analysis on this trade, I at least know how I discovered it. So then if a lot of these trades are successful, I know that that scanner is a good way to find trades. So you can see here we have the same type of thing with the $4 cross. We have the same type of thing with a $5 cross. So if we go back to this one here, what I would do then is I would stop here because it didn't pass one of my tests. It only said that the probe position here. Where I would enter this trade is if the number 2 fires, and then if the TSI MTF daily fires a long signal, which it's getting ready to fire a long signal here. The other thing that I'd like to see is the SRSI to start to rise. So once again, I'm not even making those decisions though, because I've already moved on to the next one. I'm really just doing that for the sake of this video, but I would already be on to the next one. I'd be on to my next scanner. So for instance, I would just move on to my next scanner. This one has way too many results, so I need to obviously modify this one. Some of these are tests too. So like here, this one here is TSI, RSI, EMA, TSI, RSI, EMA, 24/50. So then I do the same type of thing. I go through here and I look for a pattern that looks interesting, and I don't see any pattern that looks like interesting. Everything looks like it's potentially going to break down. So I guess hopefully I'm being very clear that I'm not just firing up a scanner, looking at this thing, jumping over to a chart, and then going and saying, if we remove this, going and drawing a couple lines here, and then maybe taking my GAN tool and then saying, well, this is a channel here, let me draw this. No, I'm going around my technical analysis and everything in a very systematic way, making binary decisions. I know it's hard without me sharing the exact steps that I go through, but I'm just not comfortable sharing the exact steps that I go through, mainly because it would take a while, and a lot of this stuff requires a little bit deeper context. You can see already I've gone on some tangents here because it's as binary as possible, but oftentimes just one of the things that someone mentioned in Discord today is whether or not you need all these indicators and if you can just make it on price action and volume analysis alone. Yes. In fact, you should develop an edge on price action alone. Price is the most important thing. Everything else is interpreted through price. So if you can have an edge on price action alone, indicators are shortcuts. The terrible thing about indicators is that they're always lagging. They're lagging on the most important thing in the market, which is price. Price has a superiority over everything, and price action has a superiority over every one of your indicators. Every single indicator will always be lagging. And the indicator is an interpretation of price action. And if you haven't dived into that indicator on a deep level to really understand what is it really telling you about price action, then you're misusing that indicator, and you're missing an opportunity to have that indicator be a further part of your edge. So I mentioned that because my decisions are viewed through the prism of price action. So while I talk about all these binary decisions on indicators, if something in price action doesn't match what's within the indicator, then that's a binary decision that it's not a good trade. So it's a hard thing to get across, and part of that is just doing what I said, developing an edge on price action first, and then you can start adding these other things that will reduce your time to do technical analysis. So now that I've explained kind of a full overview, more in depth than I anticipated because we're 30 minutes in, let's just dive into the Forex market, and I'll just walk through that process. This one's actually going to be pretty simple. I have the same type of setup on the Forex market. So I have a 3-chart setup, and this is more of my daily algorithmic trading, what I call algorithmic trading. And on this here, what I have is a 3-panel setup, and I'm only looking for one thing. And I have a watch list over here called Forex, and this is Forex, the non-US pairs. So I don't trade any US pairs with this algorithm specifically. I have another algorithm that I do trade US pairs on. But here, I start at the top. And for this algorithm, I'm not buying retracements. So I have another algorithm that buys this retracement. So right now, I'd probably be buying this retracement here on my other algorithm. But with this one, I'm looking for 2 things. That's all I'm looking for. And this takes me less than 10 minutes to go through all the charts and see whether or not there's signals. So these first 2 indicators that you see here, the TSI MTFU and the TSI MTFD. These two indicators that you see here are my signals. So the last signal that fired here was a short right here. That's the last signal. So I think I'm still in this trade right now because I have not got an exit signal. Now, the early signal fired here to go short. So this is my early signal indicator, and this is my take the trade no matter what indicator. So on this indicator, if a signal fires here, I'm taking that trade. So what I do, and this is something nice with TradingView, especially if you have a watch list, is that there's no signal today. See the close of this day here? There's no signal here. So I just tab, or I push the space bar, and then it'll go to the next chart. No signal. All right, I don't do anything. No signal. See, I'm seeing another trade here. So no signal for this algo. No signal. Oh, no signal here, but there is a reversal signal on a couple indicators here. No signal. Let's see if we even find a trade for today. No signal. Look, I'm just looking at these top two indicators, and I'm just looking for a long or a short signal. That's all I'm looking for. So you'll see, okay, so now here we have a long signal. We have an early long signal on the CHF JPY, the Swiss franc Japanese yen. I should get used to saying the names. I don't know. I just don't care to say the names. So here you see on the previous day close, I got a long signal. Now that's my early long signal. So what that means, part of my rule is then to look further. Now my other part of the rule is to actually write this down, because I don't start doing my technical analysis right away. Because what I might find is that the Japanese yen, I might have multiple pairs, and then I have to look at multiple pairs and decide which one is the better trade. So sometimes I get signals on the same pair or the same currency, and then I just got to decide which one of those signals is better. So remember this. This one here is, so I've written that down, that I should go back to it. And sometimes you'll see what I do. I don't always do this. I just find that I have a notepad and I just write this down quicker than actually doing something like this, where I would then highlight this to be red. So then that would tell me that I go back and look at it. So, but you'll see I don't consistently update it because I haven't made it part of my process. So it's just something I haven't adopted. I find that me writing things down, because it's just right then and there, is quicker. So here I have the CHF JPY written down. Let's go to the next one. And oops, we're not showing our signals. Now, I know you probably get this already, but this is literally what I do. I can go through this really quick. See how quick I can go through this? This signal here fired short, and I missed it. So I did miss this signal, this early signal. But I was already in here because remember I said that no matter what, on this top indicator, I take the trade. So I did have a little bit of chop here. So here, but no matter what on this top indicator, it's been very reliable for me to take the trade. I've developed it that way. So we go down here, no signal. Now I can keep going on and going on, right? But you get it. You get what I'm looking for. There's a signal here. Early signal on the Euro HKD. So there's a actual early signal here. So I would write that down. All right. So you can see here on the watch list, I still got some more to go down. So let's go here because here's the Japanese. So there's not a signal there. There's no signal there. There's no signal there. No signal. No signal. This one has a signal. So the British pound, Australian dollar, has a signal for a short. And it's two signals aligning. So I would take this short. So this would be GPB AUD. All right, so I have a signal to trade off of. So let's go into just my process. My process, once again, is I've got a signal to trade off of. And the first thing is it did cross the 24 here. It's a good sign. I see a couple other things that tell me that I should have a binary decision to move to the next chart. I move to the next chart. And then my next chart is really simple binary decisions on how this super guppy is acting, and then where it's at in relation to the 40 and the 10-5s. And then I go to here. Next binary decision is a series of indicators, and I'm looking for the same type of signal on these indicators, and these indicators are all firing the same type of signal. So this is actually a trade that I should enter today. So I will put that down as a trade to enter today. And let's go back to the CHFJPY. This one here is firing long. This one here is not a trade. It's on a binary decision right now that I should not enter this trade. The simple binary decision is that it's riding one of my baseline price indicators, which is the 24. And I should just be patient here. I should let it blow past that. So I could potentially miss this trade. But this is my early signal. So another algo that I trade is a pullback. But that would distract it from just this single binary decision. But that's all I do. So keep in mind, I find maybe 3 trades a day on this algo, and then I go through my process of analyzing that, and then I set up my trade, which is 3 positions. One is take profit at 1 ATR, another one is 1.5 ATR, and then the other position is left to ride. And then sometimes I might add on actual retracements, but that's using my STSI indicator. So my super TSI indicator I use for retracement buys. Simple. That's a process. I mean, I can't, it takes me about, like I said, 10 minutes to go through all these charts, find the 3 trades, do further technical analysis, set up my trades, and I'm done within 20 minutes because I have the process down. I have all the numbers down, and I just execute the trades. So my next one we'll do is let's jump over to the crypto market. And in the crypto market, I have one chart called Crypto Light. And this one here, I start on the weekly time frame. And I have a watch list on Binance. I do the same type of thing that I just did there. So what I do is I look at the weekly time frame. And on the weekly time frame, I'm looking for a pattern that tells me, like ADA right now is fitting a pattern where I would start, and I've already identified this already, but it's fitting a pattern where if it holds up on the weekly here, then it would be part of my short list to do further technical analysis on. And that's then where I would go to the next chart. And the next chart is the daily. And then I would do volume. I would do price action analysis. I would do measured move analysis. I would do value channel analysis. And the other aspect of analysis for my entry. But what I do here, this is a simple process. I pull up the weekly on each individual chart, and I go down this. This also gives me a good feel of what's happening in the crypto market, because you can see here, I just push space. You can see the same pattern is aligning with AE as ADA. See the same type of pattern. Kind of a similar pattern in AGI. It's not, Aeon is not quite getting there yet. AM is having the same type of pattern. So you can see that's the same type of pattern. So you're starting to see these trends. This is common in the crypto market. You're going to see these same type of trends. But then you're going to see something like this. And let's go down here a little bit more. So this is holding up a little bit better, ARN, as far as it didn't completely bottom in price comparatively to BTC. So then you'll come across something like this, BAT. So this is where, remember, I'm looking at the weekly time frame, and you're coming across something that the obvious channel here, the obvious point where I would probably want to pay attention on BAT is right here at 3711. So what I would do is I would put a alert at that channel there, just there, and then I would say weekly channel mean. So when that alert pops up and then I see it within TradingView, I know exactly why I put that alert, and I know what type of trade that is, which is basically my swing trades based on analysis of the weekly time frame. And then I go to the next one. I go to the next one. Now see, I'll mention on BAT, my crypto trades are very simple. They're this trade idea is very simple. I'm basically looking for mean of value ranges, and then I'm ensuring that it holds up at that mean of value range. And then I enter positions based on that holding up, and then the channels continue to hold up on the daily time frame. So if it gets to here, then I would go to the daily time frame and I would look at measured moves. And what I would then do from there is then create my trade ID, or enter my trade, my probe position, and then as each channel holds up, then I'm typically getting to size. That's typically how I trade this trade idea. So hopefully that's clear. So we go back to the weekly time frame. This should be on the daily here. And like I said, it's pretty simple. I just go down, and you can do this. Like, here's another one that's, well, this is BCH. I wouldn't trade that. Let's go here. You see that there's similar patterns here. Here's another one, BNB. Now, I already mentioned in this video that I trade BNB pretty religiously, meaning that I'm trading the pullbacks. I'm watching it closely. This is something that I do technical analysis on daily. So I'm looking for where's the best time to buy BNB. So I'm always, this is one of those that is a special case for me in the crypto market. So I'm watching this a lot closer. So I have positions way down here, way down here, way down here. I have some positions right here. I probably have a position right here. I'm not sure exactly the exact numbers, but I'm buying these pullbacks. And I'm buying these pullbacks based on measured pullbacks. And oftentimes I'm starting with the weekly time frame. And then I go down to the daily for my entry. So I'm hopefully it's not lost on what I've covered here. I know this video it's hard without me saying, okay, here's my list. And I didn't do that intentionally, just because this video I'd be going on even more tangents if I shared my exact trading edge list. The other thing that is important is that you need to look at trade ideas that you get from other people, and you don't own them. What I mean by that is that you don't own them until you take ownership of them. So remember in the beginning of the video, I mentioned an impulse move. So this is one impulse move right here. That's an impulse move on the weekly time frame. Remember I said that 50% of that you're looking to hold up, and then 50% of that is kind of one of your maybe trade rules. Maybe that's a new concept to you. Maybe it's not, but let's say it is a new concept to you. If it's a new concept to you and you learned it from watching my video, what you need to do then is, you don't believe it. It's meaningless to you. You go back and you look and see, can I apply this to my own personality, my own trading? Do I see it recurring in the market? Is it something I can trade in real time? And then you need to make it your idea. You need to make it part of the core of who you are as a trader. And it's not because I mentioned it and it makes sense. It's because you've done the legwork to look at that and to say that this is a pattern in the market that I can exploit to pull capital from the market. Otherwise, you're never going to trade that with conviction. So you need to then prove to yourself that these ideas that you're adopting have validity in the market. Otherwise, like I'm going to repeat it, you're not going to trade it with conviction until you own these ideas. So, and everything I put out, that's really the way to look at it. I feel like this is one of those videos, and I hate to end it this way. I feel like I almost should scrap this video based on where it's at right now, because I feel like I went on too many tangents and I wasn't as clear as possible. If you can leave feedback down below, I'd love it, because I do this every now and then. I do a video and I have a very good outline, but then where the video ends up is not as tight as my outline. See, I don't trade the way I do videos. That's the problem. Because I'm always looking to add value and to help people have breakthroughs. So like in my one-on-one sessions, we're very focused. Typically there's a challenge that is very clear that we need to solve. In these videos, I'm trying to kind of scatter across a broad or a very focused topic, but also when I mention something, it sometimes isn't fair to mention something and not at least give a little bit of context. I've watched enough videos where people mention things and they offhand mention something and they never give context to that offhand mentioning, and it's kind of frustrating. So when I offhand mention something like an impulse move, yeah, that's great, but if I can just take maybe another minute to explain to you what I mean by the impulse move if you're not familiar with it, and then maybe draw a little bit in the video. I've watched many videos where people don't do that. So for me, it's kind of a pet peeve. So if that's annoying, I apologize, I guess, but it's kind of, I've adopted that style because it annoys me when someone mentions something, but they don't just take a little bit of time to give context. It's also when my videos are a little bit longer. They're typically an hour long, just because I am stopping here and there to give the context to a lot of the things I discuss in passing. Here's what you should take away beyond a doubt. In every one of these examples I showed, it started with the process of how I would discover trades. Some of it is a scanner. The other ones were indicators, then going chart by chart and looking for one thing. And then finally we ended here on, this is real simple on the crypto market. I'm looking at the weekly time frame and I'm looking for channel means and channel support. And I'm not trading unless it's within that channel mean. So I'm already at a higher time frame than most traders are in the crypto market. And then I'm just looking for where's the best place to enter on this chart. If you look at BRD, let's just say on this chart, it's holding up pretty well on this channel. This is one of those things that just tends to move. But this there's no logical trade opportunity here. BAT is the one that's closest to where you could say right here but it still doesn't meet my threshold of a trade. So my threshold of a trade is right here, is where I need to start paying attention to it. So until it gets there, I'm not paying attention to it. I mean, I am, because I'm in the market a lot, and also I'm communicating with people on Discord, and they might ask questions about it, or I might see it pop up in a scanner and I might see an opportunity to do a different type of swing on it. But as far as this primary trading idea, I don't need to pay attention until around the 4,000 sat mark. That's really where I need to start paying attention for this trade. Other than that, it shouldn't be on my radar. But how I got here is just a process. So I'm not wasting time. So when I have on my calendar, crypto market analysis, weekly time frame, I know exactly what I need to do. I fire up my watch list, I fire up this chart, and I push space until I see something that meets where I should take a trade. And then if it's there at that point in time, then I do technical analysis. If it's not, I put an alert. And then when an alert pops up, I do technical analysis on what's happening in real time in the market and make a decision based on my trade idea. So in closing, like I said, this is a terrible way to end this video. I probably will do an updated video that will be a 20-minute video that's more concise. What I'll probably do is I'll look at, maybe I'll take one trade idea that I can provide, and I'll go through and just execute that trade idea in real time, very focused. So I'll do just a very focused execution of a trade idea. If you think that would be valuable, leave a comment below. And then I think that's a video that probably would help give even further context to this, of just, let's just do a trade idea, run down the list, and then I'm just going to run through it and just talk through it and not go on any tangents, and just completely just run down and show this is the clear way, so that you're not wasting any time, you're focused, you're applying your edge. That's really what to get from this video, which is, well, I've showed you multiple markets here, but I'm able to trade those because when I've assigned the time to do the technical analysis on that, it's second nature, the process that I've developed to do it. So I'm not wasting any time. There's no time wasted at all. And the second that something doesn't align, it's out of my mind. It's no longer part of my mental energy. So that's the other thing to keep in mind, is that I develop these processes. Like BAT's a prime example. BAT, I'm not watching it. I'm not looking for trade opportunities on this. There's probably maybe a minor swing opportunity here, potentially, based on how it's kind of slowing down, but it probably has another impulse move down to get to that mean. So I'm not spending any more mental energy on it until it hits my alert. If it never hits my alert, I miss the trade. You're missing trades every second in the market. Maybe not every second, but you're missing trades. You're always missing trades. Just get used to it. You're going to miss trades. It's a great thing to miss trades. That means that you have enough an edge that gives you enough opportunity. If you're never missing trades, then there's probably not an opportunity in the market. So that's one way to look at it. If you're not missing any trades, then you probably haven't developed a trade idea that has enough opportunity in the markets that you trade. So that's all in this video. I definitely look forward to seeing you in the next one. If you're not subscribed, subscribe here on YouTube. You'll find a link down below to join Discord. Feel free to join, ask questions. I'm active every single day, so you'll find me there at Discord. I look forward to seeing you in the next video.